Good morning, it's the 17th of March 2010 and this is your daily outlook. FOMC leaves monetary policy unchanged and the Bank of Japan doubles its credit program to $222 billion. Yesterday's trading was focused on the late afternoon FOMC rate decision and the ensuing statement. The market drastically shifted its expectations on the pace and timing of the Fed rate hike following the official White House nomination of San Francisco Fed President Yellen to join the FOMC board. Yellen is a well-known dove on monetary policy, and subsequently the expectations for the first rate hike has been pushed back to September. The market yesterday was expecting no change in its policy. However, there was a dim hope that the phrase extended period would be removed from the statements. The rate remained unchanged, however the phrase remained, although the Fed did mention an improving labour market and a positive economic recovery. In other housing data, we saw starts fall 5.9% in February, which was a big disappointment as the market is currently pricing in at a bottom. Overnight, we had the end of the Bank of Japan policy meeting in which they doubled its bank loan program to 20 trillion yen. These measures were taken so as to shore up liquidity and avoid a deflationary spiral in the economy. The decision was also taken following intense pressure from the government to further loosen its monetary policy. Japan's Finance Minister Naoto Kan said that the yen has stabilised for now and the concerns of a double-dip recession have receded. Dollar-yen price action yesterday was between 70.72 and 89.97. Yesterday, the Eurogroup outlined certain measures to aid Greece. However, they stressed that aid is not needed for now. Greek Finance Minister Papakonstantiou reiterated that his country has not asked for aid yet. However, the current high borrowing costs are not helping. S&P reaffirmed Greece's BBB credit rating and was removed from negative credit watch. Eurodollar looks like it will bottom in the near future and a significant correction in the price is expected. However, it is important to note that the current gain in the euro is due to a reprising of default fears. The longer-term view is that economic growth will stumble due to massive fiscal cuts underway in Greece and other fiscally strained economies within the EU. Eurodollar price action yesterday was between 136.55 and 138.16. So today the market turns its attention to UK unemployment figures expected to increase to 7.9% for the month of January. In the States, we have a number of mortgage data released along with producer prices for February. Overall, the PPI reports are expected to drop. Today we also have crude oil inventories for the week expected to drop to 0.6 million barrels. Currencies to watch out for: Eurodollar and the dollar yen. The Eurodollar pivot point is at 137.25 with a preference to enter into long positions at 137.35. The dollar yen pivot point is at 90.20 with a preference to enter into long positions at 90.25. Today's calendar of market movers: UK ILO unemployment for January expected at 7.9%. US producer prices for February expected at 4.9% and crude oil inventories weekly expected to drop to 0.6 million barrels. Now on to equity markets. US equities closed positive yesterday with the Dow closing at 0.41% and the SP 500 at 0.78%. The European bourses were positive yesterday with the FTSE up 0.48%, the DAX at 1.14% and the CAC closing positive at 1.23%. The time of writing, the Nikkei was at 1.17% and the Hang Seng at 1.62%. This has been your Daily Outlook. I'm Emma and Joe from the easy-forex dealing room. Have a good day.
Not only have you found a great place for Forex news, you found a great place to trade it. Registration is easy. Just click Join Now. Membership has its unique benefits, such as the freeze rate, the trade simulator, the inside viewer, and personal dealers. Your personal account manager waiting for you now.